So in today's live stream, we're going to start by talking about the US dollar index, what the dollar is doing, and what we're anticipating to see in the marketplace. So the first thing we do, we go to the daily time frame, and then we go to the weekly time frame to have a better understanding of what the market is doing so far. And looking at the weekly time frame, in as much as we mitigated this inefficiency right here, as you can see, this inefficiency after the mitigation, what I would have expected to see would have been a displacement after this mitigation. But as you can see, all that we've seen after the mitigation has been a consolidation. So when I say displacement, what do I mean? What I mean by that is after price coming into this inefficiency, all I would have wanted to see was come in, mitigate it, and then displace aggressively. An example of displacement is this candle right here. You can see this, how price just dropped drastically. That's a displacement. Another one is this candle right here. This is also displacement after mitigating this candle. You can see how price, after it mitigated the consequent encroachment, which is the midpoint of this week's, the next thing we saw was a displacement. This is showing us a telltale sign that there is a lot of sales coming into the market. The moment we see this displacement, then this impulsive move to the upside will be an opportunity for us to look for a sell to continue lower. And as you can see also right here, after we had this impulsive move, mitigate uh, this liquidity here, also tapping the inefficiency a little bit. You can see the next candle was a massive displacement. So this is a weekly candle, right? In as much as it may look a little bit small, but this candle right here, this is 2,486 pips. Just this candle right here. So that's a huge displacement. So this is the kind of displacements I was anticipating to see from this key level. But the fact that price did not give me that displacement is showing me a telltale sign that there could be a potential run on buy side liquidity. What do I mean by that? It's showing me that this high right here could be suspect. Price could be gearing up to run this buy side liquidity one last time. Even if we're going to go to the downside, we could potentially see a run on buy side before a reversal to now show us the displacement that we're looking for to see in the marketplace. So that is why, in as much as I'm still bearish on the dollar, I want to see the dollar grafted to the downside. On the intraday levels, I'm still focusing on the dollar going to the upside because everything I see here is a consolidation because we saw an impulse move, then a consolidation. So I wouldn't be surprised to see another impulse for a run on buy side liquidity. And after that impulse, then if I do see a displacement to the downside, breaking significant structures like from 1 hour time frame structure, then I'll be confident to start looking for sells on the dollar and also looking for buys on the euro US dollar and other XXX USD pairs. So now that being said, what we now do with this analysis is we now start going down to the daily time frame to have a better understanding of what price has been doing. And so far, you can see that in as much as we've been trending to the downside right here on the dollar, creating this lower highs and lower lows, lower highs and lower lows, lower highs and lower lows right here. Then after that, we now started seeing this impulse move to the upside. Now, this right here, I wouldn't really consider this a high and a low because everything I see right here, in my opinion, is consolidation. The only place I'll consider to be a high and a low would be this key level. I'll consider this to be a high and then consider this to be this key level. I'll consider this key level to be a low. And after that, I consider this to be a high. I don't really consider this to be a low. I consider this to be a consolidation, right? So, and after this consolidation, we saw this expansion. So, price coming down here, this could potentially be a run on liquidity to take out this sell side liquidities and then potentially graft it to the upside to run the buy side liquidity. Because if you also look at the left hand side right here, you can see right here is our bodies of the candle and it's still resting right above our key level. And we also have inefficiency still resting right here as well. So these two things These three things, because the first one is this is I don't consider this a low. I consider this a consolidation. The same way I don't consider this a low, I consider this as consolidation. Now, even though we've dropped below this, I don't consider it as a break. I just see this as price running sell side liquidity. And after a run on sell side liquidity, we could potentially reverse and run the buy side liquidity. So that is why for now, my intraday analysis, I'm still focused on the dollar going to the upside to run a buy side liquidity. And now if we go to the 4 hour time frame to see what the market is doing on 4 hour time frame, now, on the 4 hour time frame, we can see that we also have this inefficiency present right here. So we can outline the inefficiency as well. Now, this inefficiency right here, if we are anticipating to see a buy from this inefficiency, we would like to see a 15-minute shift in market structure. And right here, we'll have a high and we'll have a low. And then what you see right here, you see price came in here, broke structure. And after this break of structure, the next thing we saw was price come down for a retest and also to run sell side liquidity resting right here. You can see the sell side liquidity resting right here. Now, after we took out this sell side liquidity, you can see we had an expansion within this structural high and low. You can see price broke structure right here. You can see that. And after breaking that structure, we came back down into this gap, mitigated it the first time, rallied, came back down, took liquidity from this previous low right here, and then had this expansion. Now, we're working with the smaller time frames. And one thing I need you to understand is the high resistance liquidity and the low resistance liquidity. Which areas do you think has the high resistance liquidity and which areas do you think has the low resistance liquidity, right? Now, if we go to the 30 minutes time frame, what we're looking for now is areas that has high resistance liquidity and areas that has low resistance liquidity. Firstly, if we go to the 4 hour time frame, let's go to the daily. If we go to the daily time frame, you can see that right here, there's been a run on liquidity. On the daily, we'll go to the 4 hour time frame. On the 4 hour time frame, you can see we have a low and then price drop down. We see a run on liquidity. After that run on liquidity, right here, you can see we have a high and then a run on liquidity. So price is consistently taking liquidity from buy side, it took liquidity. Firstly, we took liquidity from the sell side right here, and then we took liquidity from the buy side. We came back down, failed to take liquidity from this low, and then took liquidity from this high, violating this liquidity twice, right? We took liquidity from the buy side the first time, came back again, took liquidity from the buy side again the second time. So this right here is giving me a telltale sign that we could potentially be hunting for buy side liquidity, right? And when I talk about buy side liquidity, what do I mean? I mean this high right here is buy side liquidity. Right here, after we had this down push, we had this down push, we had this down push, right? This right here is low resistance liquidity. Right here is low resistance liquidity. So now I wouldn't really be surprised to see an expansion for price to rally above the buy side liquidity resting right here to mitigate any stop loss resting above this high. That could be the next draw on liquidity because already you can see that price has dropped down, taking sell side liquidity, right? This is a significant sell side liquidity. Price dropped down, took the sell side liquidity, second sell side liquidity. And after that, taking these huge chunks of liquidity and also mitigating an inefficiency on the 4 hour time frame, we will be aiming for a 15 minutes high as our low hanging fruit. So now let's look for a 15 minutes high. 15 minutes significant high. So let me remove everything on my chart so we can look at this as a clean chart. So this is our overall swing high. And after this high, This is our overall swing low. This is our overall swing high, overall swing low. So in as much as we can still do it this way as well, we can do it this way as well. Right? High, low, swing high, swing low, swing high, swing low, swing high, swing low. Right here, we've already taken this swing high right here. So if we are bearish, price should be satisfied with mitigating this key level and then drop lower. It should be satisfied with mitigating this swing high and then drop lower to run the sell side liquidity, right? But if we are bullish, this is what I anticipate to see. This low stays sustained. We don't run sell side liquidity below this low, and then expansion to potentially run this buy side liquidity. And also this one as well is suspect. We could also take this one out. The reason why I'm saying we can also take that one out is because now if we go to the daily time frame, if we go to the daily time frame, you can see that on the daily time frame, we took a daily low right here. This is daily liquidity, mitigated a daily inefficiency. Let's look at weekly as well. On the weekly, we mitigated the weekly inefficiency as well. You can see that. Let me remove everything on my chart. You can see there's an inefficiency, a small gap right there. You can see that as well. So we mitigated it. So 1, 2, 3. So I wouldn't be surprised for price to potentially want to gravitate above the overall 1 hour high, right? Now, if you look at this, the overall 1 hour high I'm saying is a high here and then this low right here. So everything else here, I see it as a consolidation. The only significant 1 hour high I see is this. So that is why I'm more interested in this going higher to potentially even run this high, in as much as we can still go to the downside. But personally, if I'm to pick a side, I would choose for the dollar to run the buy side liquidity at least one last time, or even this key level right here. So one of the reasons why this is a very complicated price action is something I'm going to show you briefly right now. So one of the reasons why this is a very complicated price action is because of the price movements that we have right here. So after we mitigated this inefficiency right here, all I would have wanted to see is a huge displacement to the downside. And as you can see, even on the 4 hour time frame, there wasn't any huge displacement to the downside. It was just so lethargic. Price kept being so lethargic. It was a very lethargic price action. There was no active displacement to the downside. What do I mean by that? I'm going to share with you examples of when we mitigated a key level and how price reacted from off that key level. For example, let's take a look at this inefficiency here, right? You can see the inefficiency, and you can see when we mitigated the inefficiency, the first candle that mitigated it, the second candle, and then the third candle. The moment price was ready, look at the displacement. Look at this candle. Look at how it displays to the downside. Just that displacement candle alone, that's about 4,580 pips. Just one candle to show you the momentum is to the upside. But we're not seeing that on the dollar with all the move, with mitigating a weekly inefficiency. We've not even seen just one active candle displays to the downside yielding like 1,000 pips. Okay, now this one right here, which was the one that mitigated the candle, you can see there about 745 pips, and then the next candle after that was about 971 pips. So we're not seeing that displacement. You can see the other ones are in thousands, 4,000 pip, but we're not seeing that in the marketplace. And price is consistently being so lethargic, so slow. So that is why if I'm bearish on the dollar, I want to see a huge displacement to the downside. And until then, I'm still going to be, if I don't see that, my focus is still going to be on dollar going to the upside, potentially taking buy side liquidity. That is the only thing I'll be interested in. And what that means is that my focus is going to be on Euro US dollar still going to the downside. Now, it doesn't mean that I'm bearish on Euro US dollar. It just means that I think there's still some downside liquidity that price may be hunting for on Euro US dollar and the other XXX USD pairs, right? Does that make sense? If you have any questions, you feel free to drop it in the chat so I can explain this further, because it's very essential to have a good understanding of this, because it's one of the things that is going to help you in trading and understanding where the directional bias is going to be. Because sometimes you see a break of structure and then you're looking for sales and then price wipes you out, and then you're like, why did it take me out when I've already seen a break of structure and then it still took me out? Maybe my strategy is not working, or maybe it's this, or maybe it's that, or maybe it's the news. You just try to blame it on something. One of the reasons that is happening is what I just talked about now. When you price mitigates a key level from a higher time frame, from the monthly or the weekly, and you don't see an active displacement, that could be price showing you, giving you a telltale sign that maybe it's not ready to drop yet. Maybe there's still some buy side liquidity that it's waiting to mitigate that buy side liquidity before dropping to the downside. And also take note that we have a very significant high impact news this week, so you need to trade carefully, right? I'm loading the forex factory right now, so we can also look at the high impact news that we'll have this week. So for Monday, we don't really have any high impact news on the dollar or euro. For Tuesday, we only have a high impact news for JPY and US dollar by 3 p.m. And on Wednesday, we have high impact news 12:30 a.m. on AUD, 1 p.m. on the dollar, ADP non-farm employment change, and we have high impact on GBP, high impact on card, medium impact on card as well by 3 p.m. And we'll have high impact on Wednesday on the dollar, two high impact news on the dollar. Then on Thursday, we have two high impact news on the euro. 1:30 p.m. we'll have one high impact news on the dollar, and 1:45 high impact news on the euro. 3 o'clock p.m. high impact news on the dollar as well. So that is on Thursday. Then on Friday, I don't really know if the academy is going to be open on Friday because of we have non-farm employment change on Friday, so we usually don't trade on those days. But if I do see a clean setup on that day, I could potentially share the idea with all of you. But just know it's going to be a very high risk trade. So it's not the kind of trade that you want to over leverage. It's just to use the least amount of risk, right? So let's say your account is 1,000, use the least amount of risk that you know that if price goes against you, you won't be bothered. So because it's very high risk, but it's also high reward, right? That is just the thing with taking high risk trade. But at the same time, because it's high reward doesn't mean you have to put in a lot of risk in it. It means you need to use the least risk, right? And the reason I'm saying this is because the things I'm looking forward to seeing in the marketplace, they usually occur after or before this kind of high impact news, or they use this high impact news to drive price into those key levels, right? Now, one thing I've noticed in the market is when we are bullish, they use the news to send price to extreme discounts. Now, if we are bearish, they use the news to drive price to extreme premium. Does that make sense? So if we're bearish, if I'm extremely bearish and I want to see price go to the downside, the news usually takes price to the upside to mitigate the buy side liquidity, wipe out anyone who was selling early. Does that make any sense to you right now? So I wouldn't be surprised if we do see the Friday high impact news to send us higher to run this buy side liquidity. I will absolutely not be surprised to see that happen, and it becomes the catalyst to send us to run this buy side liquidity, because now traders are going to call that a manipulation. Now, the thing you have to understand in the market is that every single thing happening in the market is a manipulation. The market wasn't designed for you to come in here, make $1 million or millions of dollars, and then walk away with that. It was designed for you to come in and lose money. It was already manipulated. Everything you're trading has already been manipulated for you to lose. So the only way you can win is to, firstly, you have to be patient. Secondly, you have to be disciplined. Thirdly, you need to always use good risk management, because there's no guarantee that any trade is going to work. Zero guarantee. And if you take a loss on a trade, there's nobody to blame but yourself. You can't blame anybody. You can't blame your broker. You can't blame nobody. The only person you can blame is yourself, because it means that you didn't take the right opportunity or whatever else that caused that. So it's just how trading works. You just have to, the moment you start taking the blame for your wins and your losses, it helps your psychology and it makes you to even grow more and learn more. And the thing with trading is nobody knows it all. That's just the thing. Nobody knows it all. I've seen people who've been trading for like 30 years and they're still learning from the market. The market is still doing something new that they haven't actually encountered before, right? No two price actions are exactly the same. Imagine how long this market has been trading, but still no two price action is exactly the same. There's still going to be something slightly different from what happened in point A and what happened at point B. There's definitely going to be something, even if it's a millisecond of structure, that will be different from the other one you're trying to compare it with. So no two price actions are the same. That is why your strategy can work on the 4 hour time frame today, and on tomorrow it's not going to work on the 4 hour time frame. It doesn't mean there's anything wrong with your strategy. It just means that the market is not ready to offer you what you want to see or what you're expecting it to offer to you. It's not ready to do that. So that being said, now you can see clearly how even after price came down, took liquidity. So this low right here was Asian session on Sunday. So you can see how price came down for that liquidity, took the sell side liquidity, expanded higher, broke a 5 minute structure right here. We'll have a higher low, a break. Now, hopefully, we see price use this key level as support and then potentially continue higher. So that's the only thing I will be anticipating to see, unless we want to drop to the downside and run this sell side liquidity. That will be the only other thing. So two things are involved right here. It's either we're going to mitigate this position. We've already mitigated it. So it's either we're going to continue higher, or we want to come in a little bit into this inefficiencies, or this inefficiency right here as well. And let's go to 15 minutes time frame. So on the 15 minutes time frame, you can see we'll have this inefficiency right here. So there's still a wide range of inefficiency right here. And we also have this high right here as well. So on the 15 minutes time frame, it's much more clear. I'll just make it a different color. So hopefully, we see this act as a strong support and then potentially send us to the upside. So that is the only thing I'll be anticipating to see. And this high will be suspect. But personally, if I'm on any trade, I wouldn't put my take profit above this high, because there's no telling that price is going to take this high, because this high right here is a high resistance liquidity. Why is it a high resistance liquidity? Because we have a high right here, and as you can see, price took liquidity from this high before dropping, right? And then we have a low right here. Price took liquidity from this low and this low before expanding higher. So both sides has high resistance liquidity resting both at the downside and at the upside. So it makes it really so complicated, because if we had a low resistance liquidity resting right here, it would have been so much easier to target this high. But because we don't have a low resistance liquidity resting right here, we will have a high resistance liquidity resting here, high resistance liquidity resting here as well. So it makes it too complicated. So the best thing to do is, if you're on any trade, you trade within the range low, within the range high. Price comes close to this inefficiency, exit. So if he wants to take the high, amazing. It doesn't really matter, right? The most important thing that matters is you made some profit for the day, and you call it a day. Even if it's a 1:2, 1:3, or whatever, that is something. You take that and you leave the market. So I'm going to end this right here. And in the next live stream, I'm going to talk about my analysis on Euro, and also look at Bitcoin. I think Bitcoin's been skyrocketing today. I think we're at 65,000. You can see how this happens. The analysis spot on, exactly how I outlined this week after week on Bitcoin, since I was calling for price to hit this key level. You can see the inefficiency. And I said if we're going to have any sort of retracement, it's going to be at this key level right here, 59,000. And if price should smash through it, we're going to use that as support. And then next target is going to be the all-time high. And look at how it happened, exactly how I outlined that. Smash through it, use it as support, expanded higher. Next key level to anticipate to see Bitcoin is all-time high. So I appreciate you all for tuning in. And if you have any questions, feel free to drop it in the chat, and I'm going to be there to answer you.